The International Monetary Fund, otherwise known as the IMF, has approved a facility of $3.35 billion for Nigeria. This is part of an allocation of special drawing rights, or STEARS, of the International Multilateral Institution. Now, Nigeria received about $3.4 billion in May 2020 under the IMF's Rapid Financing Instrument. According to the IMF, the STR allocation will benefit all members, address the long-term global need for reserves, build confidence, and foster the resilience and stability of the global economy. It will also particularly help the most vulnerable countries struggling to cope with the impact of the COVID-19 crisis. Now, Nigeria is currently facing a currency crisis of its own, with the exchange rate at the black market crashing to as low as 523 naira against the dollar, following the ban of the sale of forex to bureaus de change, or BDCs. Now, analysts say the country's inability to attract foreign exchange is a major reason for the currency crisis. Joining us now to discuss this is development analyst at STEARS Business, GBEMISOLA ALONGE. GBEMISOLA, good morning to you. Thank you for joining us again. It's good to see you.
Thank you for having me.
This is really interesting stuff, isn't it? I mean, it's a lot of money that's coming out of the IMF. And as I said there, these pertain to special drawing rights. But I want you to explain to us what they are, because it's not, the money itself, it's not actual currency, is it? Explain to us how it works.
Okay. So the special drawing rights are some sort of reserve assets that each country that's a member of the IMF gets. So recently, this new allocation was the IMF's effort to sort of help countries that have been badly hit by the COVID-19 pandemic. So usually there is a review of the general allocation to every member, like the total allocation every 5 years. So the review this year was the highest ever, which was $650 billion. And then what that meant was that every single country then has like their own allocation. So the way the SDR works is Nigeria has a voting right of 0.5%. So we get $3.3 billion. So we, like you said, it's not actual money, but what happens with the SDR is it's an asset that you keep, and when you need money, you exchange it for actual money with other countries. So if Nigeria needs to get money today, we can just simply exchange our reserve assets, like our SDR, with another country that has cash to give us, and then we get cash and then we use it at little or no interest rates. So that's how the SDR works. And then if a country, every country, like I explained, has their own SDR allocation. So Nigeria has gotten its own SDR allocations. And then if we exchange it and we have less than our allocation, obviously, we start to pay interest to we pay interest on our SDRs. But then if we have higher, like if, for instance, Nigeria has excess money and wants to give it to another country that needs, we would also earn interests for that transaction. So that's how the SDR works. So it's not exactly a loan or a fund, but it's just reserve assets.
Okay, I mean, I know that this is all about, boosting confidence and, assisting countries with their liquidity and everything. But then $3.3 billion is a lot of money. And you say that if Nigeria needs money, we can always change it. We need money, don't we? I mean, we will always need money. I mean, we're talking about an amount that is almost like 2 trillion naira, almost the value of what we used in the last budget to service debts. What do you think by the time that this assistance will become operational from August the 23rd? What do you think should be the thinking of the Nigerian government as to what to channel, this sort of assistance to? Almost 2 trillion, as I said. What do you think? How useful can it be to Nigeria?
Very, very useful. So I'll just do a bit of background or history. Nigeria hasn't been very eager about getting money from the IMF or using IMF SDR windows. In fact, if you check, the first loan that Nigeria actually ever received from the IMF was last year. So we had applied for loans that had been approved in the 1980s, early 1990s, but we never actually got the money until last year when we got the loans. And then if you even check our SDR allocations and the interest that we pay on SDRs, you notice that that's one aspect of the IMF facility that we actually use. That's so in 2008, during the global economic crisis, we actually used a lot of our SDRs. Between 2010 and I think 2016, we barely used SDRs. We didn't get loans from the IMF. So it's not exactly something that everyone jumps at. And that's because once we exhaust this $3.3 billion this time, we won't get any more until like the IMF reviews and like reallocates SDRs to the entire country, all the countries again. So it's not something that we can jump at. However, it's some sort of between 2016 and this year, we've used the SDR allocations significantly, but nothing too drastic. We've never used up our entire allocation. As a matter of fact, I don't even think we've used up to 1/3 of our allocation. So it's obvious that the Nigerian government is not exactly too eager to use these SDR allocations. But that doesn't mean that this isn't available to us. However, there are other options. So the SDR allocations, you're basically exchanging with another country. Before another country can decide to give it to you, they're just processes, right? So there are other options for loans and there are other options for assistance that countries would rather, approach rather than doing these SDRs. However, if we decide to actually get the entire SDRs, I doubt we will, at least not in the near term. It would help with liquidity. $3.3 billion at the moment is almost 10% of our entire foreign reserves. So it's very significant. Like you said as well, it's 2 trillion naira. That's like 1/5 or so of our budget, right? So it's very, very significant. But then we wouldn't, there's several things that we can use it for. We can use it to pay interest on loans. We can use it to supplement our budget deficits. But then I don't think that that's something that the government will want to do at the moment. I don't think that we would, we're not desperately in need of the money today, especially considering that we have just approved a Eurobond issue last week. So I don't think that it's something that we're jumping at least not now.
Understood. As Steve said, we need money. We need foreign reserves. And in addition to this SDR from the IMF, there's also the prospect of a Eurobond sale coming into Nigeria in the latter part of this year. Tell us what we can expect to that, and especially against the backdrop of the central bank banning sales to BDCs. There's definitely going to be a lot more pressure being put on the Naira, as we've seen in recent weeks. So with this proposed Eurobonds coming into the country, at what length would that go to help Nigeria and its foreign reserve pressures?
So the Eurobond is $6 billion. That's a lot of money. And it's very urgent liquidity that the country needs today. It's also, so at the moment, what's causing declining, you mentioned that, okay, the banks, the CBN stopped or paused selling foreign exchange to BDCs. So that's one thing, right? What that does is, and the reason why we're seeing the effect that we're seeing in the black market today is because of the signaling. People are now frightened. If I can't get money from BDCs, where am I going to get money if I simply just want to keep my money in dollars? And you can't just walk up to a bank and ask the bank to give you dollars without the adequate documentation. If you don't have your Form M or Form A, if you're not paying school fees or paying hospital bills or importing, you won't be given foreign exchange if you walk up to the formal channels. However, BDCs were like the channel through which people can actually get money. But because CBN has stopped issuing out funds to the BDCs now, people now feel like, it's difficult for us to get money. Eventually, I feel like it'll stabilize. But then another thing that's causing this strain, or even the CBN to take these measures, is because although crude oil prices have increased, crude oil production hasn't increased to match those prices. So we're not back to pre-COVID-19 or pre-March 2020 levels where we were earning a lot of money from crude oil. So that has affected us. But another thing that has affected us is that the CBN has been giving out a lot of money to importers for import manufacturers. Manufacturers that need import. So a lot of them have been getting money to import things, import machineries, and all of that. That obviously wouldn't happen forever. After some time, I believe that CBN will cut back on the amount of money that they're giving for these manufacturing importation, and that would reduce the pressure on the reserves as well. So when all of this plus the $6 billion that we're expecting from the Eurobond coming, that should sort of stabilize the black market, stabilize the foreign exchange reserves, and just cause us to have more room to give out more money, and maybe the CBN can then resume sales to BDCs again.
Fingers crossed.
All right. That's good, but we'll come back to you, Gbemi. We'll go on a short break now, and then when we return, we'll take the discourse further. Please do stay with us.
And welcome back to the morning show here on Arise News. We're still joined by development analyst at STEARS Business, GBEMISOla ALONGE. Gbemi, thank you very much for staying with us there. I mean, if we head back to the STEARS that Nigeria is to receive from the IMF, you've already said that, Nigeria has had a long history of being a little cautious of its financial dealings with the IMF, and in fact, the first loan Nigeria ever received from the Monetary Fund was only just last year. That being said, this SDR does constitute, a reasonable amount of money. How far do you think it will go, this amount, to helping Nigeria's financial situation as it stands now?
So just like last year, when we got around $3 billion from the IMF as well, it was very significant. At the time, Nigeria was in a very bad fiscal space. We were battling with COVID-19. We needed to ramp up testing, ramp up buying PPEs for healthcare workers that were treating people. At the same time, today, we haven't even gotten back to where we were before. So it's very important for Nigeria to finance our budget, to provide financing even for the rest of the country that needs to get back on its feet. So because of the pandemic and because of lockdowns, there was a lot of companies could not go about their business dealings as usual. And then apart from that, we have major security issues that we're battling with. So it's indeed very important. Like, Nigeria needs all the money it can get. Finally, we have our foreign exchange situation. We've devalued severally over the last year, and because the CBN is unable to, because of the low foreign reserves that we have, the CBN has sort of caught up selling foreign exchange to BDCs as well. So Nigeria needs as much money that it can get, especially foreign exchange, to balance our reserves and to also help on the fiscal side with our government spending.
All right, Gbemi, how much of this essentially trickles down, to the basics, to the common man, to SMEs, to young, startups, etc. I get the point of why, the federal government needs to do this, boost confidence, be liquid and everything. But then you made reference to the issues surrounding the COVID-19 and everything. But the complaint, as you know, last year was that the palliatives were not something to write home about, as far as individuals and, small businesses were concerned. And now that we have the possibility of this $3.3 billion from IMF, and then the $6 billion coming from the Eurobond, what should the ordinary Nigerian expect out of all this?
I'll say again that I don't think that we're going to use this $3.3 billion, at least not immediately and not at once. The last time we even used up to 90% of our SDR allocations was in 2008. And that was because, the entire world was going through an economic crisis, and the money was required at the time. Even last year, I mean, when we had, when there was COVID-19 was at its peak, different countries were scrambling around, Nigeria as well. We didn't go to our SDRs. I mean, that could be argued that is because we got the rapid financing instruments from the IMF as well, which was around $3 billion as well. So maybe we didn't need it. But then Nigeria is not very, we don't do as much dealings in the SDR window that would then warrant us relying solely. I mean, so there's a lot of dependence on this money that I'm not even sure that we would use. So that said, how would the money trickle down? I mean, the way money goes down from the government to the people is by projects. So if the government carries out different projects from the rail line to fixing roads, no matter the project, even building hospitals, right? People are employed, and the more you employ people, the more you put money in their pockets. And then you have different funds. Last year, when COVID-19 was at its peak, you saw the CBN and even the federal government issue out a lot of, or create a lot of funds. We had the manufacturing fund, we had the aviation fund, even fund for services, right? There were a lot of loans given out to people through BOI last year. So that's another way that the CBN and the federal government actually ensures that money gets to people. So it's not just by, and then we also had like welfare programs like the conditional cash transfer that started at the beginning of the pandemic and the lockdown last year, where the federal government gave out conditional cash transfers in advance of like times when they would usually give out the money. So this is how the money would naturally or usually get to people. With these new funds coming out, we should expect the same thing. A lot more funds, maybe targeted at different types of companies that have been badly hit, and those who they believe, or those who the government believes are, quick to transform this money into growth for the economy by employing more people, which is why we can maybe say that, which might be why the CBN is focusing on the manufacturing sector now. They're giving a lot of money to manufacturing sector to ensure, because this sector employs a lot of people and stimulates growth in the economy. So this is naturally how the money would, whatever money we're getting from the Eurobond issue, or if we eventually use our SDR allocations.
Gwemi, if we were to switch gears slightly and take a look at financial inclusion in Nigeria, it does seem to be a situation where not everybody believes that the benefits of a financially inclusive society, if we use Nigeria as the host nation, that the benefits of a financially inclusive society don't outweigh the costs of the process of becoming financially inclusive. Where do you lie in that argument when it comes to financial inclusion in Nigeria? Is it a good thing, and does that good outweigh the cost?
It depends on the cost that we're looking at, right? If we're looking at financial inclusion in terms of getting people to have bank accounts and all of that, we have seen, and in fact, we have a very recent article on STEARS Business about it, how for banks, is not exactly the benefits of getting people to have bank accounts does not warrant setting up branches in some rural areas or some remote areas. So costs like that have obviously would outweigh the benefits of getting people to put in money. And we know that at the moment as well, so because of that, because of traditional costs that are quite high, banks and other financial institutions have rolled out certain alternative financial instruments or financial inclusion methods. So agency banking, even getting people to using the current systems that exist in the rural areas, using thrift collectors, community cooperatives to get people to sort of formalize their money or formalize their financial systems. So we've seen that happen in different areas in the country. So in times like that, sometimes the costs, sort of match up with the benefits. But at the moment, I don't think for formal financial institutions, they're encouraged by the costs to then go out and, penetrate these rural areas. So that might be one of the reasons why we've seen we've seen Nigeria fall short severally on its financial inclusion targets.
Okay, Gbemi, thanks for that brilliant explanation. I know that there are different school of thoughts as to how you deal with challenging situations and challenging times, whether it's a recession or the sort that we are dealing with as a result of the pandemic. Some people will say, spend your way out of it, print money, borrow money. Are you worried that we may be overborrowing in any way?
So I don't think so. If we're looking at Nigeria's borrowing situation, there's several things that we need to look at. First thing is, can we pay back? Can we pay back these loans? And how do we pay back these loans? By stimulating the economy. Is the economy in a good place where is borrowing money the issue at the moment? So in recession sometimes, the issue isn't really that, in recessions, people have lost jobs, countries or economies have gone to like a standstill. So ensuring that they're back up, ensuring that someone who wasn't able to sell as a result of the lockdown, someone who didn't have, or a company who didn't have enough working capital to keep their staff employed last year, ensuring that they get back on their feet and they're able to employ the staff that they laid off, or even more, is what we need to stimulate the economy. And in Nigeria as well, one of the issues that we face is the continuous or the rising security challenges that we have all over the country. So we have, one of the major issues for our inflation, our increasing inflation in Nigeria, is because of the insecurity with regards to food. So, so farmers are unable to go to the farm and things like that. So we need to continue spending to get companies back up, to give out grants, to give out loans, to create infrastructure that would allow companies to exist or to even thrive better. So from roads to airports to seaports to trains, we need more of those so that companies can do business easier, so that doing business can be easier, and so that companies can spend less on doing business. And then we also need to spend on curing some of the ills that are in the country at the moment, ensuring that farmers can go back to their farms. Maybe it's by employing providing more ammunition for the army, creating more security in all these in all these states where the farmers are badly hit. So, we need to stimulate the economy so that the government can have the money to pay back the loans that we've already gotten. I don't think we're in a terrible place yet. The frequency of the loans have been very, very, very high in recent times, and the value of the loans have been a lot high as well. But then most times, some of the loans that we've collected are so long term that, the next 30 years, we're still paying the loans. So we still have some leeway to get things right. However, what are we using these loans for? Are we just getting them and just pocketing them, or just getting them and using them for short-term things like paying salaries, which go, after the month or after the year, you're done paying salaries and you don't have money to pay salaries for next year? Or are we using them for infrastructure such that after tomorrow, this infrastructure earns money for the government and even allows other companies to exist, and the existing ones to, expand? So it really depends on what we're using the loans for. I don't think we need to watch how we're obviously getting loans, but I don't think we're in the red yet. I don't think so.
Okay, that's
breathing space. There seems to be some breathing space then for Nigeria as it pertains to its borrowing practices. GBEMISOLA ALONGE, who is a development analyst and also a contributor at STEARS Business, thank you very much for joining us on the morning show today.